Hey, what's up guys? Welcome back to DG Capital. What is a TFSA? In this video, I will break down everything you need to know about the TFSA and explain all the rules to help you make the best use of it. So, let's get started. TFSA stands for Tax-Free Savings Account. It makes for an okay savings account if you're looking to just collect interest, but it makes for a great investing account. In my opinion, it should be called the tax-free investing account. A lot of people don't realize that the TFSA can hold many different investments. It can hold stocks, ETFs, mutual funds, GICs, and more, allowing you full tax-free investing. There is a lot of confusion around contribution and withdrawal rules around the TFSA, so I want to clear those up for you guys. Even if you're not interested in investing in the stock market, it is nonetheless crucial to understand how the TFSA works, because it means that the average Canadian pays zero tax on their investments. Whether it's stocks, mutual funds, bonds, GICs, you name it. Failure to understand how the TFSA works can result in tens and thousands of dollars in unnecessary taxes. The US has something similar called the Roth IRA, but it is nowhere near as flexible as our TFSA. The TFSA does have a few restrictions, but I will outline those in this video. To encourage Canadians to save, the Stephen Harper government back in 2009 first launched the TFSA. With this introduction, Canadians no longer have to pay taxes on interest, dividends, or capital gains on their investments in a TFSA, whether held inside the account or once when withdrawn from the TFSA. By 2017, over 19.5 million Canadians have opened a TFSA, with combined assets equaling $275 billion. And the best part is, not a penny of taxes has to be paid on this balance. The first rule I want to talk about is that you have to be 18 or over to open a TFSA. And based on when you were born, that will determine how much you can contribute to your TFSA. Let's say you were 18 when the program was launched. That means from 2009 to today, you can contribute $69,500 into your TFSA. Otherwise, you start calculating at the age of 18. Once you turn 18, you will start to accumulate TFSA contribution room every year. Even if you don't open a TFSA account or file a tax return. By the way, make sure you file a tax return no matter what to get those benefits and credits. Every year, you gain additional room in your TFSA for contribution. This is called the TFSA annual dollar limit, and it is indexed to inflation and rounded to the nearest $500. So for 2020, the TFSA annual dollar limit is $6,000. This is an important fact to remember. The investment income and changes in the value of your TFSA will not have an impact on your contribution room, either in the current year or in the future years. Now, if you don't use the contribution room, it accumulates indefinitely. Trades made within a TFSA are truly tax-free. Rule number 2, you cannot offset your capital losses against your capital gains, nor can you earn a dividend tax credit like you can in a non-registered account. Unlike the TFSA's cousin, the RRSP, you are stuck paying 15% withholding taxes on US dividends because the US does not recognize the TFSA as a registered pension account. Dividend income from other foreign countries may also be subject to withholding tax. Like the RRSP, you also don't pay capital gains tax on US shares or any other shares. Rule number 3, the withdrawals you make get converted to additional contribution room Jan 1 of the next calendar year. The market value of your TFSA may be different than what you've contributed based on your investments. If your investments have done well, that would increase what you can withdraw from your TFSA. And if they've done not so well, that decreases what you can withdraw from your TFSA. So let's say you own a $5,000 stock. If that stock's value were to go up to $10,000, you can now withdraw $10,000 from your TFSA. However, if that same $5,000 stock drops to $2,500, then you can only withdraw $2,500, even though you've contributed $5,000 to buy the stock in the first place. You can withdraw the market value of your TFSA at any time without having to pay taxes or penalties. Withdrawing funds from your TFSA does not reduce the total amount of contributions you've made during the year. And remember this, you can only recontribute the amount you've withdrawn only to the extent you have room available in your TFSA. So for example, if I were to withdraw $5,000 from my TFSA this year, I can only recontribute back the $5,000 this year if I have $5,000 worth of room left in my TFSA. Otherwise, I have to wait for next year, when that withdrawal gets converted into additional contribution room. Let's run through an example to put everything we've learned into perspective. Let's take our friend Hassan as an example. And he turned 18 in 2015. If we add up all the contribution room available to Hassan from 2015 to 2020, it would look something like this. Hassan would be able to add $38,500 into his TFSA. Because Hassan has been saving diligently his paychecks from his part-time job after school, he wants to put away $20,000 as his first investment in his TFSA, and let's say he's buying shares of ABC Corp. At the end of 2020, after he makes $20,000 in contribution, he now has $18,500 left in his TFSA to use either in 2020 or carry that into future years if not used. Let's fast forward to 2021. Because Hassan didn't use that $18,500 he had left, that got carried forward, and in 2021, he gets an additional $6,000 because of the TFSA annual dollar limit. Add that to the $18,500, he now has $24,500 in his TFSA to use in 2021. Because of Hassan's great efforts in stock picking, that $20,000 investment he made in 2020 is now worth $40,000. In 2021, Hassan decides he needs money for university, and he needs to withdraw $40,000 from his TFSA. Doesn't matter when, any point in 2021, he wants to withdraw $40,000. If this were a non-registered account, he would have to pay capital gains tax because his $20,000 investment grew to $40,000. But because this is a TFSA, he can withdraw the entire $40,000 completely tax-free, and the sale doesn't even have to be reported on his tax return. That's the beauty of the TFSA. Now let's say out of the $40,000 that he withdrew, he only used $10,000, and he wants to recontribute back the $30,000. In 2021, he has two options. Since he only has $24,500 worth of contribution room left in 2021, he can contribute this amount, and the remaining $5,500 he can contribute in 2022. And when 2022 rolls around, his TFSA contribution room will be $6,000 because it's a new calendar year, plus $40,000 that he withdrew in 2021 that got converted into additional contribution room, giving him total contribution room in 2022 of $46,000. And now he can safely recontribute back the $5,500 he didn't contribute back in 2021 in 2022. That's the first option. The second option would be to wait until 2022 and recontribute back the $30,000 at any point during this year because he has $70,500 of contribution room left in 2022. So that's Hassan's story of his TFSA. There is no limit when it comes to growing a portfolio of investments within your TFSA. If you don't use a contribution room in 1 year, it simply carries over the next year and the year after that, and it carries over indefinitely until you decide to make use of it. So to summarize, use this formula to help you determine what your contribution room will be. Start with the current year's TFSA annual dollar limit, add in any unused contribution rooms from previous years, and on top of that, add in any withdrawals from last year. That'll give you your contribution room available for any given year. Rule number 4, if you over contribute to your TFSA, you will be subject to a 1% penalty based on the excess contribution room each and every month. Going back to our example with Hassan, let's say he decided to recontribute back the entire $30,000 back in 2021, where he only had contribution room of $24,500. That would mean his over contribution is $5,500. And every month he has his over contribution of $5,500 in his account, he will be charged 1% on that balance until either he withdraws that balance or until the TFSA contribution room grows enough to absorb that $5,500 or any excess contribution. So my suggestion is that if you have over contributed to your TFSA, make sure to withdraw the excess amount to prevent any unwanted taxes, rather than waiting until your TFSA contribution room grows to absorb the excess amount. If you have made it this far in the video, congratulations. I'm now going to go over some concluding notes about the TFSA, again, to help reinforce how you can make the best use of it. How can you find out about your TFSA contribution room? Well, you can either call the CRA or log on to the CRA website, go to My Account, and you can check your balance there. The TFSA balance on the CRA website updates every year. It doesn't update every time you make a contribution throughout the year. It only updates once a year to give you that snapshot at the start of the year. The other, more accurate way of determining what your TFSA room is to log on to your TFSA issuer, whether it's your bank or your brokerage, and download a summary of your transactions and add up all the contribution you have made to your TFSA. If you transfer an investment from your RRSP to your TFSA, you will be considered to have withdrawn the investment from the RRSP at its fair market value, and the amount will be reported as an RRSP withdrawal and must be included in your income for that taxation year. Old age security benefits, the guaranteed income supplement, or employment insurance benefits will not be reduced as a result of you earning income from your TFSA or the amount you withdraw from your TFSA. This is also where the TFSA differs from an RRSP, where any withdrawal from an RRSP is treated as income. The income earned or the funds withdrawn from a TFSA will also not impact your eligibility for federal tax credits, such as the Canada Child Benefit, the Canada Workers Benefit, the GST and HST credit, or the age amount. If you want to withdraw funds from your TFSA for the purpose of putting it into another TFSA or with another issuer, there will be no tax consequences as long as the issuer completes a direct transfer on your behalf. Otherwise, if you withdraw the funds yourself to recontribute to another TFSA, this transaction may have tax consequences because it is not considered to be a direct transfer. In this situation, the funds will be treated as a regular contribution and will reduce your TFSA contribution room for the year. So let me give you an example. Let's say I contribute $5,000 to my TFSA in 2020. Then I want to move it to another bank. So I take the $5,000 out myself and take that $5,000 and put it into another TFSA account with another bank. What happens is that $5,000 contribution the first time, then I make a withdrawal the second time, and then I recontribute the $5,000. So in that year, I have contributed $10,000 in my TFSA, even though I just contributed, withdrew, and recontributed. The all-purpose TFSA can be used for both long-term savings or short-term savings. It's completely up to you. Whether you want to save for higher education, save for a car, a down payment on a house, or even retirement. Whatever your goal is, make sure you take full advantage of the TFSA and grow your investments tax-free. There are additional rules and regulations around a TFSA that I was not able to mention in this video because of timing. So I will leave a link to the CRA website where you can learn more. If you like this video, make sure to hit that like and subscribe button. Let me know your thoughts around the TFSA and what kind of savings goal are you using it for in the comments below. Finally, please share this video to help support the channel. And I'll talk to you guys in the next one.